I decided to take a look at the basics because I've realized that most of you have not grasped the basics, and I really haven't made an effort to explain some of the things. So yeah, let's just start. Um, so generally, I started trading in 2021. By then, I was looking for a way of making money online. I was looking for a way to make dollars, basically. So I stumbled upon affiliate marketing, and then um I was taken to, I think it was Bitcoin, yeah, cryptocurrency, especially Bitcoin, and then eventually I stumbled upon the forex market. And I remember the first time that I started trading, I executed a trade and I made $2. No, it was $0.3, about 30 cents. And I was so excited. And I remember that by the end of that day, I had made about $30 after depositing $10 in total. By the next day, I had blown all that money in that account. So from that point on, I discovered that you can make a lot of money from the forex market. But then I thought that it is as easy as just pressing buy or pressing sell and then making money. So the journey so far from the beginning, it has been up and down. It has not been a smooth journey. It's been a journey of ups and downs, making a lot of money, losing a lot of money, making a lot of money, losing a lot of money, up until recently when I can say that okay, at least now I'm consistently making money overall, because that is the idea of trading. You cannot make money all the time. You have to make and you lose. However, the losses should be considerably lower than the wins. And I'm sure most of you have a similar experience where you started, lost a lot of money on the forex market, or lost a lot of money paying people to teach you. That happens to everyone. However, what I learned in my journey is that there is no easy money. That was the first thing that I learned. There is no such thing as get rich quick. There is no such thing as just press buy or sell and you make a lot of money, you become a millionaire. There's no such thing. The second thing that I learned is that everywhere there is money in every industry, whether you're in the trading industry, the medical field, research, um, political world, wherever there is money. But what you need is a mentor, someone who has been successful in that particular industry. Some mentors are for free. You can learn from people without them knowing, or you can let them know to teach you everything that they know. Some can charge you a certain price, some will not charge you a certain price. It just depends. So, what are your expectations? Most people come into trading with the idea of making money. That is the biggest motivation for most people. People want to learn how to make money. However, I'll teach you a number of things. I'll teach you the psychology behind money. I'll teach you some things concerning trading and investing, and then um, basically analyzing the markets, how to set up and finalize some things. Yeah, so this is just the flow of what I'm going to talk about today. Psychology of money. We're going to talk about some concepts, how much money you can make in trading, whether it's for everyone or not. Secondly, we'll talk about the difference between trading and investing. So we'll talk about asset classes, earning versus making money, how to read pairs, and so on and so forth. So the concept of money. Biggest question is what's money? All right. Um, some will say that money is a medium of exchange, a medium where you have that ability to exchange something for something else. It could be a coin, it could be a silver coin, which you give someone and that someone will give you a sweet, or it could be a paper, $5,000, 5,000 kwacha note. That's a paper. However, it is an authorized medium of exchange whereby you can give it to someone and that someone can give you two loaves of bread. However, there are other different forms of money. You see here that I've drawn a dollar sign. You can have a different kind of paper which does not look like the Malawian kwacha. It can be a dollar. That is also money, because if you have a dollar, you give it to someone, regardless of where you are on the planet, it will be recognized as the medium of exchange. You have other things like banknotes, the pound, the British pound, the euro. You even have a Bitcoin here. So you can have a Bitcoin, which when you have one Bitcoin, it is equivalent to, right now it should be around $100,000 per Bitcoin, something like that. So it is a medium of exchange. If you give someone one Bitcoin, that is a lot of money, which in exchange, that person can give you notes. They can give you a certain product on the black market or on the dark web, or they can give you anything that you have agreed. You have a credit card. If you look at a credit card, whether it's a Visa, whether it's MasterCard, it's basically just a piece of card with a chip. When you use it, electronics work inside of it, and eventually you are able to access services or goods which you would have otherwise not been able to access. So some people have this idea that money is just the 5,000 kwacha notes, or 2,000 kwacha, or the 1,000 kwacha. You give them Bitcoin, they will not accept. You give them pounds, they will not accept. Those people are a bit slow-minded, because they do not understand that there are a lot of different means, or a lot of different modes of exchange. Pounds, Bitcoin, coins, silver coins. You can even have gold bars, gold coins, gold watches, different things. And the second thing that you should understand is that every single person has a different financial status, which I'll call a financial footprint for these purposes. So, what is the financial footprint? This is more like an identity, a financial status, a financial identity, which is determined by the patterns of your bank account, one. Two, your income. Two, your bank account. Three, your net worth. All right. So think about it like a thermostat. You have a high, so the highest, this line, which is describing a high. So this is when you have the most amount of money in your bank account. Think of it that way. You feel most excited, you feel happy, you feel rich. Down here, you have your low financial thermostat, where you're sad, you feel like you're broke, and all that. Now, the thing is that, generally speaking, this financial thermostat, most of us, we like to stay somewhere in between the highest point and the lowest point. This is where we like to stay. Now, what happens when we have a lot of income coming into a bank account? If there's a lot of income coming to a bank account, our financial thermostat will start approaching the top threshold. Now, as we are rising higher, we feel more confident, we feel happy, we feel excited, we feel like we can achieve anything on this planet. However, because of the fact that we are approaching this higher threshold, we generally tend to do certain habits or certain behaviors that will compromise whatever got us to this particular point. In other words, if you have a lot of income coming to your bank account, let's say you have started running a new business, it's giving you a lot of profits. Once you start hitting your high threshold, you're excited, you feel like you cannot do anything, you start doing things that will compromise your income sources. You start, instead of using public transport, you start hiring private. You start taking taxis, or even start hiring cars from car dealerships. Instead of eating 3 times a day at home, you start eating out 6 times a day in fancy restaurants and things like that. as opposed to drinking, let's say, Fanta or Coca-Cola. You start taking exotic wines costing 100, 200, 300, even 600,000 of budget. Now, those are the habits that will pop up just because of the mere fact that you are approaching your highest financial threshold. When you hit that level, the thermostat switches on, those habits become established, and what will happen? It will definitely ensure that you start crashing down back to your comfort zone, which is the middle here. When your financial status is going lower, let's say your income is becoming lower, you tend to start doing particular activities or habits that will guarantee or that will make sure that you start saving money, or it starts increasing your income. So you start doing particular things. So you might start eating less in a day. You might start walking as opposed to using public transport. You might you might stop buying wines or juices altogether. You just take water. So all these things that you start doing, they guarantee that you do not continue crashing down, but you reach your lowest financial threshold and you come back up to where you're most comfortable. So this is the zone where the majority are most comfortable. Again, if your finances are reaching your highest threshold, you tend to compromise your income, your balance of your bank account becomes erratic, and your net worth, it tends to drop because you start doing crazy things. If price is approaching your low thermostat or your low threshold, your lowest threshold, you start doing things that will guarantee healthy patterns to your bank account, your income gets improved, and your net worth starts to gradually improve. Now, that is all about financial thermostat. Now, something that you have to keep in mind is that between the top and the bottom threshold, which one has a bearing on someone's financial status? Right? Between this and this, which one has a bearing on your financial state? Generally, if you look at the top financial thermostat, it does not really have a bearing on your financial state. What we have in control is the lower threshold. So our goal should be to always increase our lower threshold because this is the lowest standard that we can tolerate. Okay, this is our standard. This is our lowest standard. If our lowest standard are ever increasing at every point, you'll find yourself that after some time, the zone where you were most comfortable in becomes your standard, and your upper threshold will push up high. So you find that initially you could walk while broke, while let's say when your financial status is down here, you could walk, you could use public transport and all that. But after a year, you do particular things where your threshold no longer is at this level, it is at this level. Now you're not walking, now you're using public transport when you're at your lowest. After 2 years, 10 years, you find that your threshold moves from here to up here. So you find that this can become your lowest standard. So instead of walking or using public transport, your lowest standard could be using private transportation, renting a car or things like that. And your highest threshold could be, let's say, buying a car or something crazy. So what we have in our control is our standard, our lowest standard. That is what determines our financial state. If our lowest standard is trash, then our financial state will be trash. But if our lowest standard is ever increasing and is healthy, then our financial status is good. There are a number of components that govern what our standard becomes. A lot of things. But some of the things that I'll talk about are, number one, our personal beliefs. So what do we believe in terms of money? Are we the sort of person who believes that money is evil? Or are you the sort of person that believes that money is your key to happiness? Are you the person who believes that people who are rich are evil, or they do, or politicians who are rich, they do a lot of corruption and things like that? So your belief will determine what your standard becomes. Because if you believe that money is evil, then do not believe that you're going to get it, because you will have compromising habits, compromising thought patterns in your thought process, which will compromise your ability to make a lot of money. Second thing is that, what do you personally value? Do you value the actual money? Do you value relationships? Do you value providing value to other people? That will also determine what your standard is, what your standard becomes. If you're the sort of person who values, you want to help a lot of people on this planet, generally you look at poor people and you want to build them, you want to build them houses, you want to donate clothes and all these things. Definitely you need to have a good financial standard. So you need to be well financed. So it means your income has to be higher, your net worth has to be higher, and the patterns of your bank account have to be healthy. The third thing that govern what our standard becomes is our habits, as we said, and our personal worthiness. Do we believe that we deserve the money that we are looking for? Do you really believe deep down that you deserve to earn, let's say, 1,000, let's say $10,000 every month? Do you really believe that you deserve to be making this amount of money? Because what will happen if you take a trade and it shoots up and all of a sudden you make $10,000, which in Maui Kwacha is almost 24,000, 24. If you sell it as on the black market, maybe 24 to 30 million. What will happen when you make that much money on one trade by luck? If you believe that you don't deserve that money, then I'll guarantee you that in a short space, you're going to blast through all that money. You're going to donate all that money, or buy things that are trash, or you're not even invested. However, if you are the sort of person who believes that you deserve this amount of money, then if you make it in a month, you find yourself wanting to make it in a week, and then you find yourself wanting to make it in a day or in an hour, because you believe that you are worth so much more. So that is on financial footprint. Yeah, so this is what I just explained on some of the components governing our standard. These are not, this is not an exhaustive list, there are more, but it's just an overview. So what is the conclusion? Number one, spend less than what you make. If you're earning 500,000 kwacha at your job, spend less than 500,000 kwacha. Doesn't make sense to be spending more than what you're making. Number two, pay yourself first. Always pay yourself first. If you're on a trade, you've made a lot of money, pay yourself. Make sure that you withdraw something. You do not want to reinvest everything. Whenever you take a trade, you've made $5, as opposed to taking that $5, reinvesting it, take away, let's say $1, buy yourself airtime, do something, or take away $2, or just put a rule that, okay, I'll pay myself 10% of my profits. You take a trade, you make $1, 10 cents, that's yours. If you make $10, $1 is yours. If you make $100, $10 is yours. So you can make a rule. I'll pay myself 10%, 20%, 30%, or even 50%. But don't forget to pay yourself, because a lot of people get into profitable trades, make a lot of money, but they don't pay themselves, and they end up losing all that money back to the market, which is painful, very painful. Save if possible. If you can save as much as you can, save your profits. How? Make sure that you withdraw, put in a savings account, and leave it there for emergencies. If you cannot save, then at least invest into something. Real estate, a stock, you can buy You can buy an investment. You can buy a fridge. A fridge is an investment. Those are things that will never lose value. Land is an investment. You can buy a plot of land. That is a way of saving. You've made a lot of money from trading. Take some money, buy land, leave it like that, or make a payment to something. Make a payment for your wedding photographer, or make a payment. That is the way of saving, because you're saving value. Okay, you're saving value. That is the idea. And number 4, force your savings up. So if you save 10% of your income every month, you make sure that every consecutive month you increase your saving by a certain percentage. So if you're saving 10%, you can increase by 1% the next month, 1% the next month, 1% the next month, until you're going to find yourself saving 20% of your income, saving 30%, 40%, even 50% of your income. All right, so this is just the basics of building your up your lower financial standard, or your lower financial thermostat. When you reach a certain point, then you can use your savings for other things, whether it's investing, buying assets, stuff like that. Now, how much money can you make from the forex market? Generally, it all comes down to 2 things. Number 1, your personal skill set. If you are very skilled in trading, all right, number 1, skill set. Number 2, how much money do you have? How much money are you trading with? So, number 1, if you have very good skill set, you're a good trader, you know where to enter, you know where to exit, you know how to manage your risk, you're very skilled, but you don't have enough money, enough capital, you will still make money, because there are different ways of making more capital. So what are some of the ways of getting capital? You can get investors. Okay, you can get investors. So if you really believe that you're a good trader, you should have evidence as to why you are a good trader. What is the evidence? Do you have 1 year of data backing you up? Do you have a journal that shows how much profit you've been making? Do you have a tracker? Do you have My Forex Factory tracking your trading account? So if you have that evidence, then you can find investors. These are people who have a lot of money, but they don't know what to do with it, but they want to make even more. So investors can invest in you. It can be your family member, it could be your mother, it could be your dad, it could be a cousin, it could be a friend who you have convinced that you're a good trader. Apart from an investor, you can go through another route of prop firms. So prop firms are companies whereby you place a small deposit and they give access to a larger trading capital. So there are different kinds of prop firms. Some will require you to prove your trading ability. So they'll give you challenges and targets. If you fulfill all those challenges and targets, you can access a bigger capital. Minimum being $10,000. So $10,000, $20,000, as high as $400,000. So if you have a very good skill set, you can make, let's say, 2% every month consistently, and you get a prop firm of, for let's say 200, okay, let's say a prop firm of $100,000, and you make 2% monthly. It means that every month you're guaranteed to make $2,000, which in Malawi kwacha is almost 4 million or 5 million. So that is another way. Prop firm accounts are cheap. For $100,000 prop firm account, you need about $500. So you need $500 deposit to do the challenge. Some prop firms will just give you access to the capital directly. So you give them the money, they'll give you access to the capital, but the rules are stricter. Another way of making money when you have good skill set but low capital is using compounding. So in compounding, basically you are just you have a small account. Let's say you have a $5 account. So you grow that $5 account and you trade it You increase it from $5 to, let's say, $7 today. Tomorrow from $7 to $10. The next day from $10 to 15. The next day 15 to 25. 25 to 40. 40 to 80. 80 to 100. So that is compounding. So since you have a very good skill set, you should be able to compound. You should be able to grow a small trading account. And from $5, personally, I've been able to grow from $5 to $50, $5 to $25, $5 to $100, $5 to $150. I've been able to do that. It happens, it works. But you need a good skill set. So, what if you have good skill set and good capital? Then obviously you make a lot of money, a lot of money. Good skill set, bad capital. I've talked about some of the ways of getting the capital. But if you have a bad skill set, then it does not matter whether you have capital or not. You are going to lose that money. So if you have a bad skill set, even with a lot of money, even with $100 million, you're going to blow through all that money. You waste it. Bad skill set and little money, then you're not even ready for trading. So the goal is for you to have a good skill set, and then the capital will come, because there are different ways of getting the capital. However, for skill set, the only way of getting a skill set is by learning from other people who have a good skill set. So what are some of those ways? Obviously, you need a teacher. You need someone to teach you. A lot of people go through two routes. So there's a route where you pay. So there's a payment. You make a payment and then you learn. The other route is the free route. A lot of people go through the free route. They go on YouTube, they'll go on Instagram, Twitter to look for free stuff. They'll find that free stuff. They'll even find profitable strategies, but I guarantee you it will take them a long time before they are able to make money. Because it's not just about knowing a good strategy. There's a lot more. It's not just about knowing a good strategy. You need guidance. There are a lot of things that you need to learn. For those that pay, now it depends. If you pay a good mentor, yes, good for you. If you pay a bad mentor, then yeah, you suffer the consequences. So usually what I tell people is that they should identify someone who trades in a particular way which resonates with their personality. So if they look at a trader, a swing trader, they're like, oh, I like how this guy is trading. He holds a trade for weeks and I like his strategy based on, let's say, his social media posts or interaction with them. You can decide to learn from them. But before you learn, before you make the payment, then you have to verify, you have to prove whether they are as good as they say. Look at their charts, look at their trades, see if it is consistent, see if they have students who can testify that whatever they're teaching is working, and things like that. All right. So just to recap, as we talked about earlier, it's not about the money, it's what things of value you can do with the money. You can access a lot of things with money. So it's not just about making money in trading. The money is just a tool. We use the tool to do other things. Now, money comes in different forms: paper, coin, gold, silver, Bitcoin, so many different ways. And you get what you want to get. Okay, if you want paper, you get the paper from the bank. If you want coins, you can get coins. If you want gold, there are people in Malawi who have gold in their houses. If you want Bitcoin, you can get it. Just get it. It's still a way of exchanging. It's a method of exchanging. Um, Financial footprints, we've talked about this, and we're always oscillating between two financial points. We've talked about the high financial point and the low financial point. And our aim and goal is to uphold the standard. So our goal is to uphold the standard, hold it and to push it up a bit, to strive consistently, push it higher and higher. As we are doing that, we find that the top financial point will also go up. And how much you make is a result of your skill plus your total capital. If you like skill, you need to learn, and if you like capital, you can easily get it. Alright, thanks for watching. Please let me know if you need similar content on the topic, and don't forget to like and subscribe.